Hello, everybody. Hope you've had a good week. Another Friday here. We just finished the business extension deadline. That was last Monday, so hopefully everybody got their businesses filed. I know we got probably 99.99% of our clients filed. There were a few that got rolled over for various reasons, but anyway, hope everybody got their business taxes filed. If not, that's okay. There's ways to get out at any failure to file penalties, but speak with your tax advisor if you do have that as your situation. Anyway, so today I wanted to talk about uh, paying your spouse out of your business, and why it's not really beneficial. I get this question quite a bit. A married couple, uh, one of them running a business, or they're both running the business, and uh, there's this impression that we need to pay wages to both spouses. Um, let's talk about the disadvantages first, because I think that usually outweighs the benefits of it, which is why I never really recommend paying both spouses when running a business or as running your business. So what happens is um, when you become an S corporation, as we've talked about in other videos, you are required to have an employee in your business to run your business. Every firm has different ideas about what's a reasonable and fair wage and different things about that. If you have questions about that, I've done some videos on it, I believe, and you can always ask questions. Um, However, as an S corporation, you are required to have an employee. So a lot of times, what will happen is one spouse, one member in the relationship is the primary person running the business, and that person, you know, needs some help at some point. And so the other spouse will jump in and help, and maybe they do kind of like the admin work or something, but both people in the relationship are helping to run this business. And so we have this idea that because you're helping in the business, you should also receive some wages, especially if the married couple doesn't have joint finances. Um, and so then, the one spouse is like, well, you're helping me out, so let's make sure you get paid a fair amount for the type of work you're doing. Okay, so I don't care about cash flow. I really don't. So cash flow does not equal taxes. So if you want to take money out of your corporation and give it to your spouse to compensate them for the work they've done, that's fine. I really don't care about cash flow, actual like dollars leaving the bank account, going to you, and then going to your spouse, like actual real world cash flow. We don't care. Taxes. The best way to treat those things are as non-taxable dividends or owner distributions. There's a lot of different names for it. Owner's draws, owner's distributions, dividends, whatever, out of your corporation to you as the primary shareholder. And then you gift that money to your significant other, your spouse, not significant other. This isn't a legally married relationship, because you are married filing joint. So you would then give that money to your spouse to compensate them for the work they did. Uh, why don't we want to run a formal payroll? So, you as the employee of your company are required to have a W-2 wage out of your company. There's different ways of handling that. That's not what this is about. But anyway, you have a W-2, so we have our one employee. Well, anytime you pay W-2 wages, you're subject to Medicare and Social Security tax. So you're going to pay 15.3% of additional taxes on any money that you run through wages for your spouse. So if you have a $100,000 business profit, you do a W-2 for yourself, say $20,000, you're going to pay $3,000 each in Medicare and Social Security tax on yourself. And now let's say you want to give a $20,000 W-2 or wages to your spouse. Well, now you've just duplicated, you've doubled your Medicare and Social Security tax. You're going to pay an additional $3,000 each on your spouse's W-2 wages. So cash flow, what happened? You paid less money to your spouse. You have less money in your pocket because all you did was increase your Medicare and Social Security tax. So you actually shot yourself in the foot. So you are out, additional 15% of their whatever you pay them in wages. Now, what happens on the other end when you actually go to calculate income taxes? So that's Medicare and Social Security tax, different than income taxes. So what happens on income taxes is your corporation, your S corporation, reports $20,000 less as an expense. As W-2 wages for another employee. So your S corporation, if it's a $100,000 corp, you $20,000, your spouse $20,000. That means your corp paid $40,000 in wages. Now your corp's going to report a profit of $60,000. Well, that I've done a video on how S corps are taxed. That 1120S, that corporation profit dumps into your adjusted gross income bucket along with all W-2s. So that $20,000 from you for your wages and that $20,000 from your spouse's wages is going to dump in there. And guess what? You're right back to the $100,000 of taxable income. So you pay the same amount of income taxes. So you didn't lower your income taxes any. You actually end up reporting less profit in your business. So if like a bank wants to look at it and stuff, you're going to show less profit. And on top of it, you're out that additional Medicare and Social Security tax, and you didn't pay any less income taxes. So there's no benefit. Well, we're going to talk about the benefits. So I can't say there's no benefits. There's less benefit than there is expense. You're out, that 15.3% of their wages. So that's why I never recommend doing it. It's just not worth it. There is one benefit, one small, very little benefit, and it's that you're now having your spouse, if they are unemployed or they don't have another job they go to, or they don't get any other W-2 wages anywhere, they're not paying into Medicare and Social Security. So they get less Social Security at time of retirement. That is the one disadvantage, I guess. So if you were to pay them a official W-2 wage, they would pay into Social Security. So then you would supposedly get that back when you retire. Personally, everybody can argue with me on this. I don't care. We're all entitled to our own opinions. Personally, I believe the Social Security program is a failed institution. Who knows if it's going to be around by the time I retire? I'm not counting on it. If it is, great. I get some additional retirement. If not, then I'm not going to worry about it. You are better off, again, in my opinion, you're better off instead of paying that Social Security tax to put it into an investment account that you can have control over so that the government isn't controlling how you get capital gains, dividends, and interest on that Social Security. Instead, you've created whatever else type of account. I don't like to call them retirement accounts because those imply IRAs and 401ks, and I don't like those either. But put it into like a regular investment account, grow that as your quote unquote Social Security instead of paying into the actual Social Security. So again, another way around it. So if you wanted to pay into it, you'd be better off paying into another program. So that's kind of what it really comes down to. So the official stances. You can say they're working for you and you pay them a wage. And technically, if somebody is working for a corporation, they are required to get compensated for the services rendered. That is a labor law. So if you run a corporation and your spouse is working in that corporation, technically you are supposed to pay them a wage. So official stance. Your spouse is a stay-at-home homemaker or whatever. They don't help you with your business. That's the official stance. If somebody asks, they're a homemaker, and they might lend a hand once in a while when things get really rough. That would be a good way to say it. But yes, if you're going to officially have them work for you, then you do have to officially give them a W-2 wage. You're going to be out more cash. Anyway, hope this is helpful to kind of describe why it's best not to count your spouse as an employee of your company, because ultimately you're just going to end up paying more taxes, have less cash in your pocket, and no benefit down the road. Anyway, have a great weekend. See y'all next week.